Hey, good morning, options traders. Well, how about a secret strategy that always makes money? And you're starting to hear a lot more of these websites popping up during periods of volatility because that's what everybody wants. They want the secret sauce. And everybody believes that it exists in the stock market. It's not hard to find a ton of websites out there that will all tell you about the secret pattern or the secret strategy or something that is giving them an 80% chance of making money, or that they make far more money than they lose. And it certainly sounds like a good idea, and to novice traders it certainly sounds believable. But is it? Well, if you think about it, you'll see the answer. So before we get started, as always, please be sure to click like and subscribe as well. It goes a long way in helping to promote the channel and is definitely very much appreciated. So let's talk about trading secrets. Whenever you hear a trading secret, whether it's this candlestick formation works 80% of the time, or this ABCD pattern in stock trading is the first pattern you should learn, everybody likes to dish out these secrets. However, they are nothing but hyped marketing strategies. If you look at the people who are touting these strategies, rarely do they have any trading experience. They just are out there to promote and to hype and try to make it sound like they've got the secret strategy that gives you all the rewards for no risk. They're simply designed to get you to buy their programs that make easy money. And this in itself should also raise some red flags. If this system is so good, why are they selling it to you at a relatively cheap fixed monthly price? If these programs were so good, they wouldn't have the time or the desire to teach them to you. But let's try to dig a little bit deeper. Does it make sense that someone can teach easy to do, profitable strategies? Well, let's take a look at a few examples. Let's say that I tell you that ABC stock rises on Friday, and this is my big secret strategy. And I'm 100% certain that this stock does rise on Friday. Well, think about it for a moment. And if you have to hit pause on your screen and just think about what would happen if this were true. What's going to happen is that people are going to realize this, if it's true, and they will start buying it on Thursday. And then what's the trick? When the stock rises on Friday, that's when everybody's going to sell. And if everybody's selling on Friday, there's no way it can rise. So it ends up being no longer true that ABC rises on Friday. And as before, all known information gets factored into current prices. That's really the big kicker. Now, of course, this opens up a whole can of worms, a whole lot of feedback loops that can happen. Let's say that if everybody believes that the stock will actually fall on Friday because everybody's going to be selling because everybody believes it'll be rising, you can see it gets fairly tricky. What's going to happen then? Well, now people might start shorting it on Thursday. We're right back into the same problem, just on the sell side. And so in the absence of any other information, it turns out we're still back to a random pattern. We don't know who's going to buy, who's going to sell, or how fast and furiously these buys and sells will occur. So now we can no longer be sure what's going to happen on Thursday or Friday. So that's really the big kicker that professional traders always talk about whenever you hear these golden trading rules. And again, I love one that's been popping up lately with the ABCD pattern in stock markets, or with a gap in candlesticks and telling you that a certain percentage of the time this is going to fill. Fine, that's all well and good, and it might be true, but what they're failing to account for is that traders realize that. If it's so widely known that this person is teaching it, then it's getting factored into the prices. So let's take a look at another one. What about a guaranteed gain? What if I give you a secret strategy that pays off $1,000 in 1 year? You might think, hey, that's pretty cool. I'd love to know about that. Well, we already have it. It's called a treasury bill. The problem is that everybody knows about them, and everybody knows that it's guaranteed to pay off exactly $1,000, assuming you buy a 1,000 face. And so if you hold it for a year, right now at the current rates, it's going to cost you about $980. So now you have to say, is it really worth it? See, if I just tell you that it's guaranteed to pay off $1,000, it sounds like you're getting $1,000 landing in your pocket for free. That's never going to be true in the financial markets. You're going to have to pay for any benefits. Well, what if you say, all right, well, maybe I won't buy it a year ahead of time. I'll wait for 6 months, and then I don't have to hold it as long. What's that going to do? Well, if you buy it in 6 months, you're now going to be getting about 1% on your money. You're going to pay $990 to have it mature to $1,000. See, you can't escape it. No matter what you do, it's going to get accounted for in the price. Here's another one that we've talked about recently from a little different perspective. What if you have a 50% chance to win $1 at the flip of a coin? All right, well, that's all fine and good. Might be absolutely true. The market understands that. It's going to cost you 50 cents each time you play that game. And so if you look at your long-term profit and loss profile, you're just going to be going sideways. That's a fairly valued bet. I did another variation on this one recently. What if you have an 80% chance to win $1 by selecting one of 10 numbers from a hat? So in other words, out of these 10 numbers, if you draw the numbers 1 through 8, you're going to win $1. All right, that's fine. It sounds like you've got this great edge in your favor, but remember that that's 8 to 2 odds in your favor, which is 4 to 1 odds in your favor, which means that you're going to have to pay $4 to win $1. And that just means it's a fairly valued bet. You're just going to be going sideways over time. So the thing that I wanted to make very clear here, because I'm starting to see this pop up so much now with all of the recent volatility, a lot of websites trying to tout the easy money strategies, and they all advertise various versions of them. So just be aware of that. You're going to see it everywhere. And when you start going to higher levels of trading, what you'll realize is that the volatility is really what you're after. You need price movement or an expected price movement for there to be any potential profits. The better way is, how do you figure out if it's a fairly valued bet? How do you figure out how much of an edge you have in your favor? And how do you hedge the risks that you don't want? How do you hedge, roll, and morph when things are going in your favor? And that's why you'll realize it's not about the secret strategies, it's about how you handle the volatility. And so for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. You can find it all at optionsatoz.com. Also, please join us on the Options A to Z's Facebook trading group, and you can find a link in the description below.